What's up, everyone? I don't know about you guys, but I can't turn on my TV, look at my phone, log on to my computer without seeing bad news everywhere. Whether it's talking about inflation or a new prime minister in the UK or rising mortgage rates, there's just bad news everywhere, and everybody's got a different opinion.
Very, very true.
So I thought tonight it's best to go straight to the source. So I'm going to bring on Michelle Davis from Prosperity Mortgage, and she's going to talk to us about where she thinks rates are going to go, what's going to happen on November 2nd, if anything, and just what's going to happen with the future of the housing market and interest rates. Michelle has been in the mortgage industry for 21 years and has consistently ranked in the top 1% of mortgage originators, so we're in good company. So without further ado, let me bring her on.
Hey, Caryn.
Hello, Michelle.
Hi, how are you doing?
Good, how are you?
Good. I'm sorry about this weird lighting. I'm doing it for Halloween because I don't know what's going on. So it seems like I'm in a dark room, but thank you for having me. I appreciate it.
You look a little ghostly. I like it.
I know. I don't know what the deal is. It's definitely a theme.
So we got a lot to talk about. I mean, I think last time you came on here, I don't know when that was, probably about 6 months ago, mortgage rates were just starting to go up. Yeah. But honestly, in the past year, they've more than doubled. Everyone's freaking out. Prices, at least in our area, haven't really come down that much. So housing has just become incredibly unaffordable.
Yeah.
I mean, it already was in the last years. Don't misunderstand me. We were all bidding, all my buyers were bidding on different houses and they were just going way over asking. And so it was already unaffordable. But now that money's so expensive, nobody can buy a house.
But I agree with you. They probably will be.
So I guess what we all want to know is, what do you see happening? Let's start with where are mortgage rates today, and then we'll take it from there.
Okay. As you suggested, mortgage rates have literally doubled since the beginning of the year. So let's say we were at 3.5 then, and we're at 7% now. And that has a very real impact on people qualifying in their mortgage payments. If you were to look at a $500,000 mortgage at 3.5%, the principal and interest was $2,245. Jack it up to 7%, and you're at $3,326. So it's more than $1,000 a month. This is very significant.
I mean, that's for the same buyer, same house. It's crazy. I mean, that's crazy. So what are mortgage rates today? Just go through quickly, like for a 30-year, for 15, what are they today?
Sure. So the conforming loan, which are loans under $670,000, are at 6.75% on the 30-year, which is actually a little bit better than it's been. It's been up to 7. The 15 years at 6 1/8, so better, but still not in the 5s. And then interestingly, jumbo loans are lower interest rate wise than conforming. They haven't been quite as volatile, but they've been certainly going up as well. The jumbo 30 is 6 versus that 6.75. The 15 is 5.5 versus the 6.125. And there's ARMs in the jumbo field that are attractive. 7 to 10 year ARM is about 5.375, and they're just not available in the conforming loan sizes. So if you can do a higher loan, it's counterintuitive, but if you can do a higher loan, you can get a lower rate and thereby a lower payment.
Yeah, that is definitely counterintuitive. In fact, I just want to clarify. So do you mean if you can get a higher loan, so you just should put less money down and then have a higher loan amount and you get a lower rate? Like, what exactly do you mean by that?
So it depends. Like I said, any loan over this $670,000 figure can be done as a jumbo loan. It doesn't have to be. So if you've got 20% equity at the 670 or higher, then you definitely want to do the jumbo. If you don't, like if you're only getting to a 90% loan to value to take the loan amount over 670, it doesn't make sense, and you need to stick with the conforming. The other thing about jumbo loans is that they're a little bit harder to qualify for, so you should probably keep that in mind as well. You need to have a certain amount of reserves. You need to show a 2-year work history. There's a few more hoops to jump through.
Gotcha. What about credit scores? How do they differ between the two?
Great question. So on a jumbo loan, you really need to have over 700. There's some exception products under 700, but it doesn't do you any favors. And then for conforming loans, you can go all the way down to 620. And then there's VA loans, which we haven't talked about. And actually the rates on VA loans today are very good in comparison. We're at 5.875 on the 30-year VA. So that's better than both the jumbo and the conforming. And those scores can go down to 580.
Wow. So wait,
Yeah.
5.875, and that's with 0% down for VA?
0% down. Yep.
That seems really good.
It is. It is. VA really wants, I think we talked about this last time, VA wants to do loans for their veterans. And so, they have looser guidelines, better interest rate, lower fees. I really love the VA loan. I wish more people were receptive to it. And you know what, Caryn, maybe they will be now that there are fewer buyers.
I have a lot of clients that relocate into this area, and I do several VA loans. I mean, I don't do them. I'm not a loan originator, but I have several clients that use the VA loan product, and I'm always amazed at the terms. We had a closing yesterday, VA, and once again, my buyer went to closing and got a check for $2,500. Like, I always look at the statement and say, okay, don't forget to wire your money. I was like, oh, don't forget to give them your wiring instructions to get the money. I mean, it's crazy.
Yeah, you're exactly right. And that can happen on VA when the seller is willing to give a credit of some sort towards closing costs. The VA buyer does have to pay closing costs, but if the seller gives a credit and it covers them, then they can get all of their earnest money deposit back. So if they made a $5,000 earnest money deposit and the seller's credit covers everything, they're going to get that $5,000 back at close. It's really, it's great. And actually, a seller concession is, I think, super beneficial right now for both VA and conventional financing, because a seller concession that can buy down the interest rate for a buyer by paying a point or 2 points is going to help significantly on these rates and the payments as well.
Yeah, in this particular example, we actually upped the purchase price $10,000 to have the seller contribute. We had already asked for 3% seller concessions, but she wanted to have the interest rate bought down, so we needed more than 3%.
Mm-hmm.
And the VA, it was a relative of hers. I was going to use you, but it was a relative of the buyers. Great lender though, but it was a relative, and he was trying to help her out as well. And he's like, you know what? You can get more seller help. It's allowed in this loan. So why don't you try to up the asking price, as long as it appraises, obviously. So that's what we did. We raised the asking price, the sales price, up $10,000 over. It did appraise, so it was no problem. So she got more money back, could buy down the loan and get seller help, put $0 down and got $2,500 back.
Yeah, it's a great program. You can get up to 4% of the purchase price as a concession on a VA loan. Yeah. And if you're buying a condo, you can even use it to prepay condo fees for up to a year. I mean, there's lots of different things you can do.
Is it only 4%, or is it different products that you can get more?
So VA is up to 4%. Conventional financing, you can, and FHA, you can actually get up to 6%.
Yeah.
If you're putting 10% or more down. If you have less than 10% down, you're capped at a 3% credit on conventional financing.